Good morning, all. Welcome to this session. This hub or channel is meant to be educative, to teach, and for you to know what is the next move in the market. So you are here to learn, to see things and the way it works. Well, I believe by the time if you are with me here on this hub for the next 4 to 6 months, you should have a good grasp of how trade works. For those on Telegram, I think they will see they are seeing much better than what it was. And, it's like everyday chart update that we do. And where things change, you don't just think and hope that trade will continue to move in a certain way. But here we learn how it works, really, how it really works. Now, this is the Euro USD Monday chart. And right from 1972, you can see right from 1972 till date, which is here, we can see what trade has been doing. Trade has been making upper highs and lower lows. Now, I think it looks as if it's about time again that this trade has made a recent low, and it's most likely might be making higher highs. What do I mean by that? You see this low, another higher low. This may look like another higher high. And this move may just be beginning of the higher highs, but we are going to see, we are going to follow it until we have a break of this structure to the upside and a break of this structure to the upside before we know, but that's going to take a long time. We've seen higher highs, and higher highs, the third higher highs. So we've had 1, 2, 3, 4 lows. We've had 1, 2, 3 highs. We're about probably going to see the fourth highs. And after the fourth highs, we're going to come down again. That will be taking time anyway. Because the move here, 71 till 79 is 8 years. From that 79 down to this low is about 6 years. 85 to this high here, 92. That's about 7 years. And to make another low from 92 to 2001, that's about 9 years. Then, and from here to this low, from 2001 to 2008, that's 7 years. 7 years till date. The recent low had taken more time than anything, from 2008 till 2022. That's like 14 years. That took like 14 years. Then we are going up. So our going up is not going to take anything less than 7 years. So we are looking at, if we're going to go up and begin to break structure to the upside, we are going to move 7 years to the upside. Now, this is the monthly chart. Let's go inside of the weekly. There's a whole lot to teach. Now, so this is the weekly chart. This is where we are now. So this is where we are now. So from this move, it seems we have finished the correction here. And how do we know most of the time? So like, we're still in the middle here, but we can see that this is a lift. And this may have finished with 1, with 2, and with 3 properly finished here. And with 4, This is the highest of wave 4, and wave 5 may have just ended here in terms of this correction that we had seen. Okay. And by the time we are taking structures to the upside, we should know that most likely we are done. Now, what are the structures that you think, we must, erase to the upside here before we are done on the lower time frame? Now, if we are thinking we are doing an ABC correction of this move, the entire move here, if we think we are doing an ABC correction of this move in terms of what we are correcting this last wave here, and if that you think is what we are doing, it means that we should not go past about 76 fib, retracement of this wave, in case we think that is what we are doing. But once we move past 76, then we should know that we are going to break the top and it's a new wave. Though we know right from what we are seeing that this could be potentially, number one, a big ABC. Number two, if it's a big ABC, what we are pitching then is that we think that this movement is corrective. And if it's corrective, let me go back to the monthly. Now, if anything is corrective, we shouldn't be making higher highs. I want us to teach us something. If we are corrective, the corrective move will make a higher low. And the real move, which is the trend, will make higher highs. Okay? Now, we did this and we are corrective to the downside. We moved and we are corrective to the downside. So the corrective movement will make higher highs, and the real move will make, higher low. The corrective will make higher low, like we had seen in these cases, and the real move will make higher highs. So, which means that the trend is up. Now, if you now go back to the weekly now. So, looking at the weekly, I'm just saying, if we think that this move is corrective, we are trying to say that, are we making higher, a lower low? No. So, but most likely, based on the trend and what we have been seeing, it's likely to be a real move that is going to go up and not corrective. But again, it's always good to take it. The minimum that we should see is at least a corrective wave. That's the minimum in case we are not done with this. So we should begin to look at, is it corrective to this? And we're still going to push down. But once we begin to erase those levels, then it will now be so obvious and clear to us that it is what a real move that is going to break this top here. So we are in for what could potentially be a new trend that's going to break, and it's going to go for at least another 7 to 8 years. So that is what we're saying. But we're going to see how this unfolds. Now, if I look at this, because there are things we need to see on the higher time frame. On the higher time frame, does this look like a 5-wave structure to us? On the higher time frame, it does look like a 5-wave structure, which is 1 and a 2, and a 3, a 4, and a 5. Now, this 5-wave structure here, what structure? Because that is where it gets interesting. What structure? If we had finished a complete 5-wave structure to the here, what we would expect is that this is going to go and make a 2, which should be around 50, 61.8 or 76.4 here, but not more than 85.4. But this was rather shallow. Yeah, we are going to pardon ourselves because nobody could have known that they have not completed this wave. I think there are things that I pitched to us and which I will explain. The 3 possibilities that we are thinking. I think I should go to the daily so that we can see very well what the pitch is. Now, looking at the daily now, had taught us so many things about wave. And may I just go somewhere now? Okay, let me just go somewhere for me to be able to. Good. Now, looking at the daily, we can see clearly that this is a wave 1 and a wave 2. And we can say that this is wave 4 and this is wave 5. But this wave 4 and wave 5, did we end with 3 here in the big wave 3 here, and we did 4 and 5? Now, that was what we thought, and we thought that we're going to do a 2. But this didn't go deep, and it didn't go past wave 4 of 3, if that is what we thought, or wave 4, the big wave 4. If we thought wave 4 of 3 is here, and this is a big wave 4, and a 5 to have finished a 5-wave structure, and this didn't go past it before we saw this move to the upside. Now, what exactly is that? This could have been a 1 and a 2. Now, we must not lose sight of what structure is all about, because structure must be completed. If it's going to be like a 3-wave structures, then we have to see a 3-wave structures on probably on any time frame that we want to look at it. And if it's going to be a 5-wave structure, then we have to see, oh, is it a 5-wave structure? Then we have to look at the fib level that those structures are making, to each other, before you can say, okay, no, we have completed the structure, and this is what we see. This is what we are going to do. Now, this has presented us with so many possibilities. Why we thought that. Now, this potentially could have gone down to be a wave 2 to this move, but it was rather shallow. And we felt that, okay, this wave that is going up, the possibility of it, if it's going to be a 90 or a zigzag move between correcting this particular wave to the upside, 50, 61, 76, 80 something, probably will push price down to about 50 or 61 level to now make a proper wave 2 structure to this move. Then we'll now agree that we have done an ABC of this wave, and we are going on to do wave C or wave 3. So we talked about that. But since price now broke this structure, is breaking this structure or making like an 100 or a double top, or breaking it, then the manner in which it will break it also matters to us. So it's not as if they are playing, they are messing with our brain. They are messing with what you know. They are messing with how disciplined you can get. And not that you are now trying to turn yourself to a detector. Say, oh, my mood, I think this is what they're doing. No. The manner in which it breaks it also would tell us something. like I said, if it has broken up an extension to this wave of about 123, 127, or 161.8, and not more, you could have said that now this is wave A and wave B, and wave C should be coming down with another extension of that A to B of about 123, which will break down here and could mark up to give us what we had hoped for to be a proper retracement of wave 2. Now, it didn't do that. This shallow correction is a suspect that it can never be a wave 2 in terms of what we know. Regardless of the fact that, we may say that, this move is actually quite impulsive, and that is why this thing is shallow. It does not make any sense to wave. So, and we thought that if it's wave 2, and this is 3 of 1, and this is 3 of 2, that is coming down, then we're going to break big up to wave 3 or wave C. Now, those possibilities are disappearing because this is rather coming down sharply with an impulse. So this impulsive movement, to me, now looks so much as if what we are doing now is we started to correct this entire run. So which means that when I now looked at this, I thought this move is still part of this move. And this move here is still part of the whole move. And these are giving us a clear divergence, and which may be a leading diagonal at the end of the day that we are now going to correct with 2 to later move to with 3. Now, I taught us something. What did I teach us? I taught us that we are going to do wave for wave and the use of our trend line and how to use it on any time frame. Now, if we had seen these, this will be pretty difficult for us to probably mark up in terms of dealing with trend line now. It's going to be pretty difficult for us to mark up. But if we had seen this as the beginning of possible wave 3, and we take it to wave 4 here. So this now looks so much as if this is still part of wave 3, and this is still part of wave 3. And which now means that we just broke out of wave 3 here to do a wave 4. If you took it this way, then you are telling yourself that now this is wave 4 around here, and this is wave 3. We are finished with 3, and this is a big 4, and we are finished a 5. It's allowed to think that way, that this is wave 3, this is wave 4, and this is wave 5. It's allowed. But what you must not lose sight of is that even if price is now doing otherwise, you must begin to align yourself that, okay, if price is going to do this, this is what I expect. If this is wave, it has ended with 5, 3, 4, and 5 complete here, then this should have gone down, and it's not doing that. So that tells you that this really didn't finish. This is now A with 4, and this is with 5. That is what it is and the way it looks. Now, this that we thought could be a wave 2 here or a wave B is actually a wave 4. Because by the time you do a retracement from the low of wave 2, here to the high of wave 4 down here is really at 38.4, which agrees that this is wave 3, a complete wave 3. We just finished wave 5 of 3 here. And this is wave 4. And this is wave 5, which is truncated. That is what is most likely. This is what is really on the table now. So the idea of this being a wave 2 is being eroded, because this didn't even go up as expected at 123 or 161.8 to pair down to finish the triad of wave 2. So it has made this one a strong fall in relation to this entire wave here. And that this has made this a strong 5, which is truncated. And we should not begin to see this as a possible move of wave 2 to correct this entire run. You can think that way. It is not wrong. But when something is changing, you must know that, okay, oh, I think it has changed at this level. Then my thought of this possibly being a move to correct the old move from down here to this top to make a correct move, a complete move up with 2 is what we are now saying. And if that is the case, we are going to see dollar gaining strength for more than 3 months. That is what we are saying. We are going to see dollar gaining strength stylishly for more than 3 months, and it could be less. It could be less because we've done almost a month already, of trying to move down. And why it takes time like that is because we are going to see a reverse move to the upside, where we are going to see euro also gaining strength to move to the upside. So you don't expect that, okay, because if it's going to be take 3 months or thereabout, then it will continue to just go down, and you are just picking your trade anywhere that maybe we are going down for now. You'll be surprised, and you just be taken. So you have to follow structure at this formula also to know at what point do I need to sell, at what point do I need to buy on any time frame that you choose. But you must look at what we do is a top to bottom approach. Top to bottom approach. So top to bottom approach is like from the higher time frame to the lower time frame analysis to understand what price is trying to do. Now, in terms of retracement from here to here, down here, we have dusted a 50% retracement already. We didn't touch 61.8. Now, if you belong to the school of thought that for you think that wave 2 has ended here, from here to here, wave 2 has ended because this is already more than 50, and we are going to go all the way to break the top. Me, I don't believe that. Why don't I believe that? It is the structure that is not making me believe that move. The structure is not making me to see that for now. Now, in terms of to have finished a complete wave, just what I said now, this is wave 1 and a wave 2, wave 3, wave 4, wave 5, which is complete and has finished this structure. When you are counting inside of 3, you are going to count 5 waves. And that is why it gets interesting. And that is why, again, you are not quick to jump that you have finished your wave 3, because wave 3 can get extended. Wave 3 can actually get extended. And that is why we are always careful that something must happen, before we say, okay, we have finished our wave 3. Wave 3 is usually the longest, of anything Within this wave A or wave one, big one, wave 3 is the longest. And when you see this kind of a move, it's burning down, it's winding down, and eventually it winds down. So this came down collectively. This went up also collectively. Because it's wave 5, you can see the first part of the wave up and it burn itself. It's where itself out, and we are seeing this move to the downside. Now, even in our holding, the view that potentially this is a correction or entire correction to this move from here down to this place, is that this one that is coming down is an entire correction to it. We should also engage what we know in terms of knowledge. Now, having said that, the possibility of we going up to do 161.8 to correct with 2 proper is completely off. And the possibility of this one being a 3-1 and a 3-2 is not popular to me based on this just analysis I made. Now, seeing this as a possible wave 2 in the making to correct the entire wave is what I'm entertaining, but I'm not rigid. But that is most likely what it's looking like based on the structure. And we're going to see it unfolding, okay? And if I bring out RSI, bringing out RSI, and if you look at something that even before the price, when the price was making what is going more down here, the RSI has been indicating that there has not been much push down again. From here, that is the highest. This is the daily time frame. You know, the lowest here from this point, this had become more or less like an ending movement or diagonal. And the ending movement or diagonal will take several pips from here. Let's see how many pips from this point that we saw it down to this point. That's about 1,600 pips, 1,600 pips, even though the RSI is showing us that it's burning down. So, but it's not the only RSI that you're going to use. You're going to also look at the structure to see if it's complete or not, and the kind of divergence you are seeing on a lower time frame, and it's marking up. So that's why you must know how to use your RSI. But the RSI has been indicating that we are probably getting to the low, and until we got here, and there's a divergence. This is the low. This is the last low, which pushed up, and the price made a wave. A wave 1. This is the height of 3. Now, when you see the height of 3 here, and we saw the 5 of 3 here, that also ended in a divergence here. The divergence here could have been, divergence of 5, but actually it was the divergence of the third wave. And these marked the 4th of 3, the 5 of 3, and the 4th wave. The 4th wave went down, and the 5th wave, it's a clear divergence that we can see now that this is a 5th wave and that this is coming down. Now, these are traveled so sharply down, and it's still going to break this wave here. It's going to break it to come more down. Now, let me take that off again. So we are seeing what is unfolding here. The use of trend line, it's very, very important. And in our use of trend line, we must know how to use it. When we saw this move, we tried to find out what exactly. So a break here is first telling us that this move is almost over. So once you join the first and the second return, and you are seeing this, it's telling you the move is, so you must begin to, even if it's going to go up, you must begin to plan your exit that is going to bounce down and you're going to work out. That is what it's all about. Price would always do that, but you must know what you are doing. Likewise here for wave 3, and we had a break. If you had counted your structure, probably would have sold, but even for a downs and somebody doesn't know anything, and this had come down, is the first warning that the price is coming down. Price came back to make 5. You will think that price will continue to go, and you are afraid, and you freak out, and the price is going to go and go down. Price didn't do that. Price just broke the structure to mark up 5, and price is coming down. So this coming down, if you are not out yet, you're on your own. You're on your own. And this move also, this move also here, price had broken out of here for now. And price broke out, still give you opportunity to get out here, and price is coming down. Now, what do I see? I don't see that this price is coming up to break the top for now. It's still going to break the top, but not immediately. So that is what I see. And what I can see from my analysis is that price will never come to this low again. That is, except something changes. I don't see price coming down to make this low again. So what I can see is that price probably is coming down to break this low. That is almost most definite. Then we must understand the usual behavior of price in terms of what price is trying to do. Now, on this time frame, it is obvious that this is 1 and a 2 and a 3 and a 4 and a 5. But in terms of the internal architecture of wave 3 itself, this is 1 and a 2 and a 3, a 3-3, which also wind down. The 3-3 will wind down like this. A 3-3 winding down in a divergence like this. A 3-4, and after doing a 3-4, this is a 3-3, a 3-1, a 3-2, and doing a 3-3, a 3-4, then a 3-5. So, which is correct for that. And a breakout of that structure marks this and makes this a 4 for me, and a 5. And that now, after the 5, we must do an ABC correction. Now, this must be seen as an ABC correction of the entire move. So if it's an ABC correction, because the price had traveled so much, price is not going to engage flat to make a deep penetration. When price wants to do a deeper correction, what is engaged? It's a zigzag. A zigzag correction is a kind of a correction that would travel deep. So we are seeing this as a potential zigzag. So it could start with a zigzag, then go up, because price is still going to go up to correct this entire move, to throw the next leg down. If by the time it throws the next leg down and it's not what it should be, it's not getting to where it's going, it can either engage flat or another zigzag. So we are seeing this as the first swing in terms of correction. The first swing, when we do an ABC correction of this move to the upside, see, this is one thing you must understand what price does. Price on the lower time frame is trying to make an ABC correction to the downside. Now, price on this time frame, because this is also an impulsive, is going to make an ABC correction to the upside. And this ABC correction here will be the second swing, and price is going to go down and make the third swing. If the third swing is enough, the fourth is going to move up and break the top. But if that third swing is not enough to do what we think is going to do to correct this, then we will be in for more time to correct downward, and price will be burning out and wasting time. So we might have a double zigzag, which we call a double two, or not. So whatever is going to happen, we'll continue to see as it's unfolding. But from now, we are, trying to look at the possible thing that is going to happen based on the structure that we are going to correct more deep. But once we get to about 50 mark, 50 level, okay? What do I mean by 50 level? Let's look at it. Sorry about that. Let me take something so that you understand what we are saying. I will use black to mark those level now. So this is black. This is the beginning. So I will use black to mark that level. Okay. Using black to mark that level. Then the top is here now. So that's the toppermost now. So I'm going to use black also to mark that. That's the uppermost level now. That's the uppermost level. So that's the uppermost level. So looking at the uppermost level, so we want to correct this. The three levels that we should expect price, it will be at 50, 61.8, and 76.4. So this is the first level. We'll continue to watch and see how it plays out. That's the first level. We are expecting kind of a sort of a reaction. That's the first level. If we get there, price may just bounce back. This is the second level, which is 61.8. And this is the third level, which is 76.4. So if price violates that, this is the last level. I don't expect price at 90. So that's the last level. So we are saying that price may potentially fall for about 866 pips, but not more than 995 pips, not more. Price may potentially fall. But then price is not just going to fall anywhere. Where the price is going to reach is determined by the structure that is coming. Price, after doing 3 swing down, may bounce off from the 4th. If the 4th is not turning price down to the upside and it broke the low one more time, if the 4th wave goes up and broke the low one more time, then you should expect 7 swing. If 7 swing goes up and broke the low again, then you should expect 11 swing, which should be the last swing. So it depends on what we are going to see. This is going to come down, go up as a second swing, and move down. But from what I can see, begin to see from here, most likely we might be having a double correction or a double correction of 7 swing at least minimum. At least 7 correction minimum. So we might be in the downward trend for a couple of, I don't know, because reaction here is currently being seen at about 50, below 50, close to 61.8 around this level. So, and if that happens and we have a correction to the upside, if it's shallow at 50 or 61.8, then the second leg may just kiss the bottom here. And when they kiss the bottom here, they will fool you. And what the kind of fool that they will fool you as if it's a double bottom. And while you are thinking that this is going to go all the way to the upside, it will never break 85.4 to the upside. It's going to keep within the kind of trend line created, and price will bounce back to make more lower low. So I'm anticipating that we might be having or might be seeing at least a minimum of double correction to walk up to this area of the price. So the most potential area we should see price is 61.8, 76.4. And I know by the time people are seeing price in this area, people will be confused and say, oh, we are going down again, we're going to break the low. But that is still going to take a whole lot of time if price is going to do that. But if price will not do that and make it a shallow, at least we should get here. We should get here and see, we should begin to watch a reaction. So, but potentially I see price breaking this bottom. But price may just come here, do what is like double bottom, and people freaking out, oh, now we are pushing high. You begin to see many comments on the social media and all the ups and all of that. But what I can see from here is that we are correcting with 2, and potentially it could lead to a big 2 that will come down here. But now we're going to take it one after the other. Now, see the way we try to deal with 3 here, which most of the time messes people up. When you think you've ended, and this is a 3, 4, and this is you think this is a big 4, and this is a 5, and all of that. So it's more kind of corrective here, and you saw the last 5 of that 3 being impulsive here, you know, until we did this, and we're coming down. This one came down so correctively, and again, another catch was that this didn't push, even if it was going to run like a 3 wave, it just did like a 40, and I think, yeah, about 40 retracement, and came down, you know, and went up again. You know, it's actually like the 4th wave here, you know, with 4 and with 5, the ending structure which we thought, oh, it's part of 3-1, and we're going to do 3-2. So, but for now, I'm not seeing 3-2 because this is actually impulsive. Because it's impulsive, and we broke structure. We broke structure. Let me go inside for okay. Before I go inside of a 4-hour, let me take this out. Let me knock this off. Okay, before I even knock this off, let me do something. So it will be interesting to also see how price is going to navigate around here to make this low for all those who are doing trend. Some people like to follow trend, but trend does not help you alone, but how you apply your trend matters. How you apply your knowledge of trend also matters. If you're looking at trend, this is what your trend will be telling you. Your trend will be telling you that in terms of trying to correct this is 1 and a 2, and everything has been playing. Do you understand? You saw this 4 still, on the upper part of this trend, and eventually the trend has been made nonsense now. You might think that, oh, it's just a false breakout and it's going to continue to go up. No. So what this is clearly showing me that with 5 of this is completely gone, and we have finished a cycle completely, and we are doing an ABC of a new cycle. And the fact that we broke this trend does not hold price. So don't think about this trend again. It's not operational. It's not going to hold price. It's done its work. And 4 truly, on top of it, and now it's breaking. So we might just, if you see a reaction going up, is a correction, because you must see this as an ABC. And the way this had become history and is becoming history, this trend line is becoming history, what I'm going to draw next is also going to become history. Maybe not immediately, it's still going to become history. So, but again, becoming an history, you must begin to count that this is possible. Which may not have ended. You're going to see that this may not have ended, when wave 1, the initial wave 1 and wave 2 is gauged, like gauged here tells you, oh, a particular wave has ended. It has ended. Like from here to here 4, and we did this, oh, 3 truly has ended. Even we thought it was a 5 that has ended. Now we now know that this is 3, and this is 4, and this is 5. Now, the way you saw this, I'm going to take this out now, because I need to teach all of this. The way you saw that, that's the way we are going to deal with this. From the top of this wave, and that's the way we are going to deal with that. Don't let me take it too far for now. So that's the way we're going to deal with that. It took time. 1 to 2 went, eventually broken. Now, 3 didn't break it, but it doesn't mean that 3 had finished its structure, okay? 3 didn't break it until 4 of the big wave, and now we are broken it. So let's look at the lower time frame to see how we're going to deal with the move that is coming. Let me see now. So trying to correct that. So I think it's more like that on that time frame. I'm trying to correct now. There's a slight push. Okay, so now this is what we have between 1 and 2, and we're coming down. So do we see this as a complete 5 wave? Do we see it as a complete 5 wave? That's the first question we are going to ask ourselves. Do we see this as a complete 5 wave? Because if it's a zigzag, okay, remember the time we were thinking that it could be that we are correcting this entire move as the 3-1, and this is one is coming as a 3-2. We said if we saw this as an A and this as a B, this one coming down shouldn't be anything but a C. That is not on the table, because that is how to start. Because when you're seeing this as a possible correction of a particular wave, this is 1 and 2, and this is 3, and this is 5, and we are seeing as a possible correction A, B, C, and the extension should not be more than, well, this one should be coming down in 5 waves, but it should not be more than 123, and 123 had been taken out. So which tells you that is very off the table. So that is not the view. It means that these had just been a wave 5 all along to complete. And now we are seeing, when you see after this kind of a move on the bigger time frame, what we should see is an ABC correction. So what is coming down is an ABC correction, though impulsively, but it's an ABC correction, where we are seeing this leg as the first leg of a zigzag. But as this wave 3 completed its move, then this is how to do it. We saw this as this is a potential wave 1, and this is a potential wave 2, which this will guide us when we break. Okay, this will guide us when we break. But for now, we need to finish this. Now, again, I want you to see something. When I drew this on the higher time frame, and we saw price eventually breaking the trend line created by 1 and 2, at this level, when it broke it at that level, we knew that we are doing an ABC correction. It has to break it for us to know that we are doing an ABC correction, which will tell us that, okay, the whole of that correction or the whole of that move has completely ended as wave 5. Now, what I'm trying to now let us see is that it will come to a time that this also will be taken. If it's taken to the upside, it doesn't mean that we are going up. It only means that we are completely done with a big 4 and a 5 to the downside, that we are going to do an ABC, and the ABC correction here will go deep up a bit to give us a new level. And once we get that new level, we are going to now connect the top here to that new level to downside to see how price begins to behave under that new trend line, if you're going to have deeper correction. So it will be there as long as possible to correct. And if the price should not come back again to break it, we are going up. So that is how to make use of it now in terms of ABC correction. So what I'm saying here now, are we done with wave 3? Wave 3 is usually very tricky, very, very tricky, because it could be extended. And when you are, everything will be looking like wave 4 to you or wave 2 to you. But when you know where your wave 3 and all of that, then you can probably tell. So how do we do it? So we're going to take it from the first part of wave 3 here, which is at this level, and connect it down. Now, connecting it down to this point, let me go to the lower time frame. So because I need for to see all of this. Connecting it down to this point, the use of trend, the trend line is very important. Just a bit movement outside here. Okay, so let's see what we have. I'm taking my time for you to understand. Now, correcting it up to this time, up to this level, clearly tells me that we are done with wave 3. It clearly tells me we are done with wave 3 here. Okay? And because we are done with wave 3 here, these are marked for me the last level of wave 3. This particular trend line has been broken. That's how to use it. Wave 1, A, B, C of wave 2, a 3-1, a 3-2. Now, I need now to now see that these had completed a move of wave 3 here. And this, when we thought this could be a wave 4, we thought that this one could be a wave 4 of 3, and that the price is going to come down and break the bottom to make a wave 5 of 3. This may have completed wave 3, a complete wave 3. Why? Why do I say that? Now, if we see this one as 1 of 3, and this as a 2 of 3, and this is the height of a 2 of 3, it's a learning. Now, that's within wave 3. And you know wave 4 can be not more than 140. It can be anything from here to see wave 4 of 3. If we are thinking that we are doing wave 4 of 3, wave 4 of 3 could turn down here. It could turn at 23, it could turn down here. So where we thought that wave 4 of 3 should be buried, really should be around this level for wave 4 of 3. For wave 4 of 3. Now, but what is not making this anymore to be wave 4 of 3? Because I don't expect wave 4 of 3 to break this. It has broken it. Because it broke it, it's telling me that we are going for a wave, big wave 4 of that trend, which should hit this level. If it hits this level, then we should turn down more to now finish 5 of that wave in a divergence or not. So that is what I can see. So in terms of using 2 of 3 to mark where 4 of 3 should be, you might be thinking this is what it is. But again, the first sign is that this has been broken away from or out from. Now, the 4 that we are going to do, I expect it now that it will now be this, which is from the 2 up here to this point. So this is where price potentially shouldn't break, which is here. That is where I think price shouldn't break. And this is the last place. Price should not even get here if we understand what structure is all about. Price shouldn't get here. Of course, price will not immediately until we see that we have finished 4. Price should not get here. So when price corrects around this area and turns down, then we know that we want to finish the last leg, which is wave 5. If price should break above this blue level, it means that we're actually doing an APC correction of the entire run. That is what you should be thinking about. And that means that price may have made nonsense of this trend line. But what I see happening for now, it's the price trying to correct and make a last correction here. This price, I'm seeing that this price should be going up. And going up means that to finish with 4, not beyond this trend line, go down. If price should go down, now it could push to break the low. Oh, and of course, 4 may also have completed here. The big 4 may have completed here, may complete itself here, or still go a bit more up to come down. But where I think that with 5, if it's not truncated, should not go beyond, will now be this, because this is the last place I expect it. It means that whatever